Later. Hey guys, so here for a little bit of office hours. Joe and Todd, I'm just going over with Shelly the covered strangle strategy. I know Todd, you've been doing that a bit, right?
I have. I'm debating on taking one off right now.
Very good. Yeah. Do you usually close it out around 75% profit?
Yes, but I've got one that's it's at 68% in about a week.
Yeah.
So
I mean that's a
it,
good trade. You might as well just
yeah, it's
take it.
almost like, do I take it off and put a new one on?
Yeah. By doing that, like your return per day is very good.
Right.
The thing is, when you're adding on a new one, you're at a higher price since the market went up in the week.
So,
So if the market drops a bit, then that's going to be a little bit riskier than if you just kept the one that you already have on. So
so I was thinking a variation of that would be to do a 1-2-1.
you know,
You
buy
said,
one lower.
well, no, I was going to set up a ratio spread. So
Okay.
I put, then I'd sell two, and then I'd sell another one lower. So it puts me in your covered strangle, but it gives me a little bit of a profit
Yeah.
hump
What
on that first.
strikes are you considering for
Well, I was going to do it. So what I ended up with was I would still have the same setup that you do on the covered strangle with the two nakeds
that?
and figure out what my, I guess, put debit
With
spread needed to be above that. So
yeah.
I could, so I haven't modeled it yet, but that's what jumped in my head when I was biking this weekend. So
Yeah.
what if
It could work if you sold the two puts where I did, and then you are you looking to buy the put above or below those strikes?
so I would buy a put above those strikes.
Yeah. So it's
So
more
maybe
ratio
at
spread.
because I would want to try and do a 50 wide,
Yeah.
and I'm not sure where that
Yeah.
would put me on the purchase put, but but I was going to play with it just to see what the numbers look like.
Let's play with it here. I guess it's a good idea. Um, so MES, let's say the one that I'm currently in is the 53.75, 52.75. I took in around 38 or so credit. Right now it's at 31. So it's really up to you in terms of how much protection do you want on it if it drops to make a profit on the put debit spread compared to how much are you willing to pay for it. So if you're obviously going to have a little bit of a debit on the put debit, did you say again you want to buy a put above these?
Yeah, so I'd sell one more 53.75,
Yeah,
and I would buy one at like 5,400 or something to see what that looked like. And
like that. So
yeah, what does that look like when you look
one,
at that
we're getting
graph?
about 28 credit. Shelly, this is a little bit more advanced. So don't, if you're a
Yeah,
little concerned, you're like, what the heck are you talking about? It's okay.
I'll
Um,
listen, but that's okay.
yeah, definitely start over what I'm doing first. We're trying to get more advanced here. So yeah, if you bought the 5,400, sold two of the 53.75s, sold one of the 52.75, right now you're looking at a 28 or so credit. Buying power is about 1,600 or so. Might be a little different because they already have these positions on though. So your buying power might be a little bit more. It's hard to say.
And then I'd still be willing to take assignment on the 53.75. Like I wouldn't do anything with it. I'd still treat
You're,
that as your covered strangle setup.
so you're essentially looking at a 5,400, 52.75 for debit spread.
No, no, no. I'd leave it just the way it is. But I'm saying if the 53.75 got tested, I would just let it go and take assignment on the one naked that's sitting there.
Oh,
And,
okay. Then you'd close out the bought put the 5,400.
yep.
Yeah, it's a good idea. Definitely makes it safer. If you could get an adequate credit from it, and it doesn't make it give more protection because you bought it. It's like you're doing a ratio spread and the coverage triangle together.
Right.
So, and Shaw, you'll see this too. Sometimes I'll do a ratio spread instead of a covered strangle. It's a very similar trade in the end. Um, Trying to make it in easier language than I need to. Let me think first. The way that you would do it is you buy a put instead of selling these two puts. So we're gonna try to buy a put. Don't even worry about the trade that we're currently in. Um, I would probably buy a put around 54.50 or so, and then sell two puts at maybe around 53.50. Let's just see what the credit is on that. Yeah, so the credit right now on this is about 5.55 or so. You'd only take in around $25 on the trade initially. However, if you buy the 54.50 put, the profit zone is really good on it because let's see, it's not showing. I forgot it's like analysis. It's one of these buttons. By doing that, you could get a lot of extra money if the market drops below that 54.50. You essentially want to think about it as a put debit spread at 54.50, 53.50, and then you're selling an extra put at 53.50. I'm not sure how much like terminology or language you know about options yet, Shelley. Are you relatively
I
new?
know options. I've done a couple where it's a bit of a strangle situation where we do two different ones, but
Okay.
never in futures either. So
Okay. So if you don't know what stocks, when you look at futures, they're similar, but you have span margin. Did you see on the ebook strategy channel, there's strategy guides there? I don't know if you've taken a look yet.
no.
Okay, so let me share my screen. Under the start here on Discord, you'll see a channel for ebook strategy right here.
Okay.
And then you want to go to the all strategy guides. I put it near the January 22nd. And this
Okay.
has the different strategy guides. This has every strategy I do. So you get access to everything in terms of how I set up these trades, in addition to, just the consistent passive profits and covered strangles and whatnot. So
Okay. Great.
definitely look through these guides. There's a lot of information here. I wrote all these out. You'll probably be overwhelmed, and that's okay because most are overwhelmed when they see how much stuff there is.
Yeah.
Since when you open this, it's just a table of contents for all the other ones. So all of these are separate guides that you can click on to, figure out what I do for each strategy. So I would definitely look at the covered strangle one.
Okay.
And then for the consistent passive profits, here's a covered strangle. For the consistent passive profits, you can look at the weekly MES one. Yeah, it's here somewhere. I think it was insurance. I'll find it. It's in here. All right, selling futures options and 1 week cycle. These are the consistent passive profit strategy guides. Yeah.
Okay. Okay.
And then obviously ask for help when you have it. Again, I'm going on a cruise, but I'm usually very active on here. So feel free to ask any questions in the group channels as you're looking
Okay.
through this stuff. If you go in the member chat, you could ask under Lance's workshop. You could also ask in any of those chat channels you see. As a profits chat, it's fine too. Okay.
Okay. Okay.
And don't be overwhelmed. There's a ton of stuff here, but you're here for life, so you'll feel the way
Yeah.
along. It usually takes a few months to get, the swing of things going on. Maybe just one or
Yeah.
two strategies, let alone.
Yeah. Yeah. Okay.
All right, I'll leave it open for any other questions, comments. I'll be here until around 20 more minutes or so.
I guess one of my questions would be what strategy do you think is the least risky?
Yeah, least risky is probably the consistent passive profits one. That's where I sell a naked put, usually around 26 days out, so close to a month out. And then I look for a very low delta, usually 0.05 to 0.07 delta. The delta is the approximate percent that will get in the money at expiration. So if you're selling around a 0.06 delta, there's only about a 6% chance that the market would drop this low. Um, I'll do another one tomorrow just because I did one yesterday, but I'll do one tomorrow to catch up for this week because I'll be out on Friday. If you
So
look
is the
on,
consistent passive profits the same as the covered strangles?
no, they're two separate. If
Okay.
you look on consistent passive profits channel, yesterday I did a consistent passive profits trade. I sold the naked put here. So MES was at 56.14 last night. I sold one MES at the 52.60. So it's a pretty good cushion. It's almost 400 points below. The
Mm-hmm.
market had to drop quite a bit in just 26 days to actually get below that price. And I took in 6 credit. You want to take in at least 5 credit or so.
Okay.
I think it should be pretty much the same right now if you look. So 26 days, 25 days now. Yeah, we're at 5.45 to 5.65. If you had funds available in your account, you could take it. But obviously you have to wait until the funds clear.
Yeah. Okay.
That's the safest one of all the strategies I do because I go very low delta. I let these expire worthless, so they're very easy to just handle. Most of the time you just do the trade and wait the 26 days until it expires. And MES has a multiplier of 5. So whatever the number is here, you're going to multiply by 5.
Okay.
Let's say you took in around 5.5, times it by 5, you'll take in
27 and a
around
half. Yeah.
$27 or so.
Okay.
I use $1,000 for the trade.
Okay. That's what I was going to ask. Okay.
So the buying power is going to be close to around $700 or so. You want to leave a few $100s in cash that you're not trading with. So $1,000 total for the trade, I think, is adequate in most cases.
Okay.
And then if you're making $27 off 1,000, that's 2.7%
Yeah.
in 26 days. So
Yeah.
it's a good return if you could do that over and over again. And
Right.
since we've been doing this strategy like almost 2.5 years now, we only had to manage it once, where it actually
Wow.
dropped to the strike once. We rolled down and out, and I'll definitely go over how to do that if it happens. And then it just expired worthless. So
Okay. Okay. But on your covered strangles, it didn't look like you've had any losers in the
this
last
this
year and a
year,
half.
yeah, we've never had a loser on it yet either. This year we never got a sign on any of those puts. Last year we got a sign about 2 or 3 times total. And then when I got a sign, I just sold calls against it and it just went back up and got out of the trade. So it's a little bit riskier in the covered strangle because we're having higher deltas. Consistent passive profits, we're at 0.05 to 0.07 delta. But on the consistent passive profits, I'll go up to around 0.2 delta or so. So that's about a 20% chance that we might actually get a sign. It's just been a
Okay.
big bull market, so that's why we haven't got a sign
Yeah.
this year yet.
Yeah. Okay.
Good questions.
Well, I've got some
Um,
homework to do.
yeah, there's a bit, but definitely ask for help as you need it. That's the group channels. There's a lot of helpful members here as well. And then I'll be more active when I actually have internet.
Yeah.
Joe, I think you had a question before, if you want to ask.
Yeah, I was just gonna ask. I joined the other week from the super, what is it? The super
The Monday
trades?
supers, yeah.
Yeah, the Monday supers. So
Okay.
I was looking through some of your other things there. Can I get access maybe just to the SPX trades?
You get access to the Monday spreads that I do every week.
Yeah.
So this one I did on AMD today, and last week I did the Google. So you get one trade a week on one of the credit spreads that I do. If you're ever
Is there is
interested in the other trades, you could just send me a message and we could get you set up on this.
yeah. Okay, great.
Yeah, this is a good, the Monday spreads are a good like initial way to learn how to do credit spreads. And doing one a week, if you're not gonna use a large amount of your account for it, it's a good way to start learning how the process works, about why the sold puts decay more than the bought put, and then you get more theta decay and close it out.
Appreciate it. I'll send you a DM here in a little bit.
Sounds good. I don't even know what people's Discord names are, so you'll just send in. I'm like, "Hi, Joe," and then it's like, "Oh, it's a different Discord name," but it's okay.
Yeah.
Lawrence, you're on the chat. Let's see. Do you have any questions? You can type it out. Or anyone
I'm
else?
trying to
have any
do two
questions?
things at once. Were you talking to me?
Lawrence was on chat. I was asking if she had any questions. If she could type it out. I think she might have. No questions. Okay. All right. Open for questions as you have them.
I'm looking for my next CL11 or safeguard. Have you looked at that lately?
I did a new one recently on last week.
Oh, no,
Yeah, because it had a little bit of a down day last week. So I did one on the second. I'm already pretty full on it. If you look, this is my current oil positions. I'm pretty stacked out every 30 days. Have you done the one I did on the second?
I didn't. So I don't have any on right now. I didn't like where oil was on the upper Bollinger Band, but it's kind of pulled back. It's almost at the 21. So now I'm thinking it's time to put on a new one.
Yeah. All right. Assuming I had nothing on right now, I would look around 70 or 100 days out. Do you usually go a little lower or a little higher days?
I try and do no more than when
You muted out.
so when I'm not doing the safeguards on MES or ES, I only try and go about 60 days out on these.
All right. There's no 60, unfortunately. You can look at 71.
Right. Yep.
For a relatively safer one, I would try to go 111. If you want to go for a little bit more premium decay or more initial credit, go 112. I'd look around the 75 or 76. Sell maybe a 1 with at first. And then ideally you could go 2 with. At least I like 2 with a little bit more because then you have more flexibility. So that's 0.24 on a 1 with. You could sell around the 67, 68. You're only going to get about $100 that way on a 111. On a 112, you're taking in $460. Buying power is a little high. I don't know. Your buying power might be less because I already have some on. So yeah, around there might be fine to start looking at 76, 75, and then 268. Say somewhere around there.
Okay.
69 has a lot more volume and 70 has a lot of volume too. But yeah, the delta's a little high on it, so be a little careful on it.
Yep. Okay, thanks.
Yeah, around there. Any other questions? Open for questions.
No, I don't even know enough about what to ask, so yet.
Let's see. So if you look at just stocks first, if you're more used to it, let's say we're doing the covered strangle strategy on SPY. I'll typically look around 30 to 45 days or so, maybe 39 days. And I would sell, see this little blue line that pops up?
Mm-hmm.
This is the expected move. It's pretty much about a 68% probability that will go from this blue line to the blue line up here. What I like to do is to sell a put right below this blue line. So let's sell around a 531 or 530. And then I'll look to sell another one. Now the issue is with SPY, we're going to use a lot more buying power for this. So let's say I sold a 530 to 520. We need $16,000 to do this trade. It's a lot of money just to get about $262 in the end.
Yeah.
The thing is, this is using a lot less leverage than if you're using, say, the MES contract.
Oh, okay. Okay.
For MES, we're using what's called span margin. And in span margin, you're getting highly leveraged products here. So you're able to, it's like a double-edged sword. You're able to get a good amount of credit for the buying power. However, you're also are a little bit more leveraged. You are more leveraged, so that can make it a little bit riskier. So in
Yeah,
this one, you're taking in 32 or so for very similar strikes that I just showed in SPY. 32 times the 5 multiplier for MES. You're taking in $160, a little bit less than what I showed you in SPY, but you're only using about $1,700 instead of
right.
tens of
Yeah, that
thousands.
makes sense.
So by using that leverage, you do get that extra initial credit. If the market drops a bit, you will be down more because the buying power use will go up. In general, the closer you are to the current price, the more buying power you need. So if I sold one pretty much at the money at the 56.25, I need $1,500 for that contract. Okay. That's
Yeah,
where I got the that's where I got the $3,000 number from, by the way. So if you take
okay.
100 times 2, it's 3,000. And then that would happen if the prices that we sold at got to the current price. So that's why it's a little bit conservative because we don't need that much to start the trade.
Yeah,
If you're
okay.
further away, you need less money.
That's just your cushion in case it goes
Yeah,
down. Okay,
exactly. And then if
okay.
it does get assigned, we will be selling calls against it. We'll be taking in some premium. So that will allow us to not worry as much about the $3,000. Like even if you didn't need it, you would still be taking in money on the call side.
Okay, yeah. Okay, that makes sense. I get that part. Okay, yeah, that's good.
Okay. Hi Jamie, how are you doing?
Oh, pretty well. So yeah, I've been doing pretty well the last few months here with recovering with doing just the put credit spreads. So
That's good.
after April was the month that like everything went wrong, and
Yeah.
I was curious on the Nike, how much for the people that held that, how much of a ding was that per credit spread by the time you got out, or are you still holding those?
I've already closed it out. I closed it out around 400. So
Okay,
the max loss was around 500. So I got a
okay.
little bit out of it. That was one of the worst ones we've ever had. And we're at 73. It's not moving up to where we needed.
Yeah, so that would I had four open, so that would have been like 1,600 on that, and I closed
Yeah.
it. It was putsy closing that day, and
Yeah.
I like kept going back, and I finally got it to close. And I wasn't absolutely positive that I got out of them all, and then I went. I'm like, yeah, luckily I did. So,
Yeah.
but I was curious about that just to know if I ever got stuck in one like that.
It's tough. I mean, it dropped way more than it normally does. You even
Oh
looking at the
yeah, I
days.
saw it was a lot.
Yeah, when I was looking at it that day, I mentioned that you could possibly close it the day before earnings because it was near break even around here. We went from 94 to 76. That's very
Oof, oof.
huge drop.
Yeah,
It's one reason why I prefer SPX, MES, ES. Those are the S&P 500, and those are more diversified instead of one stock. So even though Nike dropped this much, the market didn't drop nearly that much. I don't think it even went down that day. It might have went up that day anyway. So that's why you got to be careful on individual stocks.
Yeah,
yeah. I try and watch for the news, and I usually won't hold through it just in case something like this happens. But I've also, gotten out of some winners
Right.
before the news, and taken a small loss because just in case. So
Right. If you want to be safer in general, the day before earnings, if you're still in a credit spread, close it out at whatever it's at. You know, a lot
yeah,
of times we'll get a decent credit, decent profit on it anyway. Like the AMD trade I just did. The earnings are in a month. There's a chance that we will get a good credit before that, and then I'll just close it out. But it's
mm,
not always going to happen that way. So just got to be aware of it. I was willing to take the risk on it, but I only had one contract. So it was a tough loss, but it happens.
yeah. There would have been a bigger ding with four contracts. So
Yeah. Just size appropriately. Do you typically do around 4 contracts for each spread?
I've been doing four on, I think just about everything. I mean, I've maybe had maybe a few weeks or a month ago there was something where I'm like, I'm really apprehensive about this chart, but I'll try it, and I put on like 1, but otherwise I've generally been doing 4 right now.
Okay.
And
Yeah,
like
it just-
now, most of the time, if I'm like, I'm not so sure about that one. I'm like, I'm gonna feel this out for a little bit, and then I'll either skip it or give it a little time and see if it's see if it's a chart that I'm comfortable with. But like,
Yeah.
I would say I take like I take like 80% of probably 70-80% of the recommendations you put out, like when you put them out.
Right.
There'd just be a few things based on my own experience that might give me reason that I want to wait a little bit on them or not do them.
Do you have a max amount of positions you're willing to take? It's around 8 to 10 or so at any one time.
I mean, I've just usually been using like 10 to 15,000, so 20 to 30.
Yeah. Okay.
So,
We
and I've
never get
thought
to
about,
that many positions anyway, but I was just
sorry,
curious.
what's that?
We never get to that many positions open at any one time anyway. I was just curious
Oh,
like
okay.
what you're doing in terms of how many.
Yeah, I mean, so I've just done it with more contracts. So like,
Yeah.
I mean, with the number you've had open times 4, I think the lowest I was down to with buying power was like maybe 8 grand. And
Okay.
then so I had like 18 grand worth. I think I had like 36. I think I had 36 credit spreads open total or something at one
Oh, okay.
time.
Yeah, that's a lot.
But a lot of them were like it was like 4 a piece times 8 things or something like
Oh,
that.
okay. That's what you meant. Okay. I
Yeah,
just
yeah,
meant
yeah.
different stocks in general. So yeah, around 8 to
Oh,
10 total, right?
yeah, yeah, yeah. That's what I was doing. Cause yeah, like right now I don't know. Yeah, I have AMD, Amazon, I think is a spread. We have open
Yeah.
coin. Um, and I have some of these are stocks and options in here. Tesla, I think we have a spread on right now.
Yeah, I almost closed it today. We're already at around 5-6% profit on it. I was close to closing it.
Oh, maybe I closed that already. I guess I did.
But I closed an earlier Tesla last week too, and I re-entered it.
Okay.
So just be aware of that.
Yeah. Oh no, that one's still open. The one up was a SPY. Okay. I'm just reading it wrong from this angle.
Uh,
So okay, so I do have Tesla open still. But yeah,
oh,
that's how I've been managing it, and it's done pretty well the last couple months. And that's I'm about 75% of the way recovering my losses from that April crash where kind of like everything went wrong.
right.
So
Yeah,
so that's
yeah,
that's
it
good to
happens.
get about 3 grand back in in a couple months.
Right. Hi, Amit. I was gonna leave in a few minutes. Do you have any quick questions?
No, I'm good. I'm sorry I joined late.
Oh, that's okay. Yeah, I was about to end it, but all right. If there's no other questions, if everyone except Shelly could stay on, and Shelly, we'll set up a Zoom for later in the month.
Okay.
All right. Bye, Jamie, Lawrence, and Emmett. Have a good day, guys.
All right, have a good one.
Have a good one. Take care.